All right, hold on. Let me. I know I'm running a little bit late slash right on time. So
12:30 works.
I know
No 12:29, but that's okay.
this is great. I've actually had some people interested in going live, and I want to. Not sure how to share. I want to share the link. Um, I want to share the link, but I can't seem to figure out how to. I'm not sure how to. Where's the like? How do I share this on LinkedIn to somebody who might want to who might be interested?
I think I think within the on LinkedIn itself, there's like the post you made. I think you can direct them to that post about today's show. It is a little wonky though with the LinkedIn events. I feel like they need to do a little work on that.
Yeah. Just a technical. Oh, here we go. Share. Here it is. Send in a message, and I am gonna. Good deal. No, this is good, man. I'm actually really excited. I'm gonna get back onto things here. No, I'm really excited for this week's. There's so much to talk about, and I'm super happy, Brock, that you invited Addie. You know, the founder of your organization. So I'd love to do some introductions here. But for those who are just logging in, you know, welcome to Real Fridays every Friday at 12:30 with Brock Cassidy and Jeremy Potter, who is on
Suspiciously absent.
viciously absent, taking his kids to Disney.
Yeah,
Which
you got a good reason.
sounds pretty miserable, but at the same time, but we're happy to have a very well qualified substitute in Adi Pavlovich. Is that Croatian? What's your background? Is it Serbian or Croatian?
Bosnian, actually. I was born and raised in Bosnia. Yeah.
Oh, that's great. No, I spent a summer in Bosnia Herzegovina.
Oh, no way.
Yeah, in the '90s, a long time ago. But just an amazing part of the world. You know, Mostar's right there, and I toured all over Croatia, Bosnia, and Bosnia Herzegovina, and Mostar, and
I'm sure Sarajevo too. Yeah, that's where I'm from.
Sarajevo was amazing, but at the time it was kind of the '90s during the war, and Sarajevo was just a total mess.
Yeah.
And so when did you come to the United States?
94. So it was the war started in 92. So it was a couple of years into the war.
Oh wow, that's incredible. What and so how old were you when you said again?
I was 7 when we came over. So we were we were in a refugee camp for a couple of years, and then through a program we got matched with a church actually in Houston, Texas, that brought us to the States. So we were your classic immigrant, don't speak English, one suitcase, came to America. Parents were bagging groceries as their first job here because resumes don't translate over. So that was kind of our journey.
No, it's amazing. And up in New England, there were a number of families from Croatia and Bosnia and Serbia that came over during that time frame, and a lot of them were church sponsored through various Catholic churches and Lutheran churches. There's a big Catholic and Muslim population in Vermont that came from that region. And there's a town called Winooski, Vermont, and it's and it was a pretty substantial influx of immigrants from Croatia and from Bosnia, and they would always joke because they were, in some cases that they'd bring the conflict over, but in other cases they were like, yeah, back home we hate each other, but here we're neighbors.
That's totally. There's these random pockets. I haven't heard of the Vermont one, but like Jacksonville, Chicago, St. Louis are like the biggest pockets I've heard. There's these random pockets throughout the country where if you brought over 1 or 2 refugees and a snowball effect happened, which obviously grateful for. But yeah, that's exactly how it played out, right? It was a very religious, ethnical, complicated war, and then you come over, you're sponsored by a Christian church more often than not, and then it becomes this melting pot of sorts. So it's a very unique situation indeed.
And so where did you go to college, and what is your sort of career progression leading up to finding sort of launching the present company that you're driving today?
Yeah, appreciate the question. So yeah, we moved to Houston, Texas. Grew up, most of my school in Houston. Went to college, University of Texas at Austin. I've been in Austin since. And so after I graduated UT, South by Southwest was a big thing here. So I got the startup bug pretty early into my college career. And so right out of college, I joined a startup at the time called wines.com. They were building the world's largest wine search portal with a team of 8. And I was one of those 8. And that's how I just got the bug, got introduced to tech, started wearing a hat that I didn't know what it was called at the time, but it was called product manager, where I was taking requirements from wine and beer, liquor stores, mom and pop shops, and trying to normalize their database, which is ironically very similar to real estate data, right? I was collecting data from all these different sources, normalizing it to create an indexable portal that you could find any wine, any varietal, and buy it online with the click of a button. This was in 2009. Ultimately, the company folded. We sold the logo because the domain had a lot of value to it. And so my first career step was a failed startup, and then I was hooked, right? And so from there, got into consulting. And then Keller Williams gave me a call. They wanted me to lead their technology research initiative, where they were doing a build, borrow, buy approach of, hey, we don't know what's going on with real estate tech, but we want someone to tell us. So they brought me in-house, and I spent 8 years at Keller Williams, really deeply understanding the real estate problem, shadowing home buyers, home sellers, agents. And I ultimately built their innovation arm called KW Labs. So that's where the product skill set, we built over 20 different applications during my time there. And my team was responsible from ideation to creation, testing, and then creating it into a larger portfolio product where it would run with an enterprise suite. So that's kind of been my journey into prop tech. And then when I left Keller, I got into venture capital, was an EIR at Modern Ventures. Then my co-founder started NewZips. That's the abbreviated version of how I got here today.
Yeah, I can see why you and Brock synergize so well. I mean, because weren't you on the innovation side of Rocket, Brock, and kind of supporting a lot of their kind of the bridge between some of the startup companies that Rocket was sort of either investing in or looking to get to know in the marketplace?
Yeah. I mean, I had a bunch of different experiences over there, probably kind of similar to Audi with Keller, where some of it was kind of within the machine, and some of it was helping build new stuff. Some of it was helping acquire new parts. But yeah, I mean, I'm definitely really grateful for that experience at Rocket, because we did about every type of deal you could do, from buying parts of companies to full companies to launching new companies to launching new divisions. So I got to do almost every version of that. And yeah, I think Audi and I hit it off pretty easily, seeing that we've both kind of grown up at, at that time, the largest mortgage company in the country, and him on the real estate side, largest real estate company rather.
Yeah. How did you guys get connected? Because it seems like a really good match.
Yeah, it's funny. I was at Modern Ventures. I was an entrepreneur in residence, working with them. They're based in Chicago, and Easy Knock was one of their. I think they invested or led the Series A. So was one of their big portfolio companies. And so I got introduced to Easy Knock to just help them navigate the residential real estate space from a partnership perspective. And that's where I got introduced to Brock. And so we kind of built a relationship, just, VC to portfolio company. Yeah. And then as we got to know each other better, I bumped into him, probably the first conference we did when we had, launched NewZip. And I told Brock what I was doing. And I was like, hey, we want to build what Rocket Homes did, but build it on a white labeled platform. So any lender could have their own Rocket Homes in a box. And at that time, I did not know Brock's background from Rocket. I had no idea. And so when I told him that, he was like, oh, I led innovation at Rocket Homes. And it was like, match made in heaven. I don't know if you want to add anything to that story, Brock.
No, it's pretty funny. Yeah. Audi and Todd, who's the co-founder, who'd been working on different iterations of the business model before, kind of cold pitched. We want to build something like Rocket Homes for everyone else. And my coworker, who at the time, who Rick, Julie Raish, was introducing us because she'd worked with Audi a bunch, and she just like almost spit out her drink laughing of like, oh, well, this is going to be a good conversation for you.
No, look, I think it's a really timely startup to some degree, and oftentimes the growth of a tech firm is a function of the innovation you're introducing and then the market readiness for it, right? And it does seem to be really timely in light of a lot of the movement that we're seeing within, obviously the most recent lawsuit and the most recent verdict against the National Association of Realtors, and who knows how that's actually going to play out, like in real time here forward, but it's really shaken the core of the National Association of Realtors. And it's interesting, Shant Bosnian actually from Guaranteed Rate made I think a really passionate plea and interpretation of the verdict as being one who is a really staunch advocate of the buy side real estate agent, in the importance that individual has in the transaction to negotiate, to represent the borrower, to really be, because it's either going to be that person or it's going to be a lawyer, or it's going to be someone, or the buyers, the buy side consumer is going to be unrepresented in
or the loan officer, right? Like, which is not supposed to be what happens. I mean, when the early iterations of Rocket Homes, like before I ever joined, one of the big reasons that they started it at Rocket was because they were scared of having their loan officers being stuck shepherding people through looking at houses. Not only is it not really compliant, or at least it's on the edge of compliance, it also is not what they're trained to do. They're also not in that market. 10 other problems. So that's part of what led to this one of the early iterations of kind of what we're doing today, was that risk of loan officers being stuck having to be loan officers plus home search experts, right?
Yeah. So, but there are two real camps though, right? It seems like there's been a real, there's been a lot of momentum to kind of get rid of the buy side of the transaction or that commission altogether. And then there's the side of it that obviously on the mortgage business we're highly prejudicial in the conversation, because the buy side agent is our friend. We we don't want to slap the hand that feeds us. But at the same time, there does seem to be a pretty good case as to why that buy side agent representation is really important during the course of the transaction. So what happens? Like, what happens here on out? How do you see this evolving, and then kind of loop that back into, excuse me, how that impacts NewsZip?
I think there's two camps of everything these days, right? I think complete disruption is unlikely. At the end of the day, the National Association of Realtors overstepped, should have not made it a required field that when an agent's inputting a listing, that a buyer's commission is required. They could put a cent in, they couldn't put zero in. At the end of the day, that's the brass tacks of what happened here. There's NAR overstepped. These large brokerages were not colluding with NAR. Trust me, I've sat in the room of those large brokerages. But they did make a mistake by making it a requirement for their agents to be a part of NAR. And it was always a soft requirement that NAR just kind of had this like weird influence that I really do think overstepped its role as an organization of what it was fundamentally supposed to do. So nonetheless, that's how it shook out. It's going to continue to shake out, but I think complete disruption is highly unlikely. Now, obviously, like, no one has a crystal ball, but from the MLSs that did make this field optional instead of required, they've seen minimal impact from consumer behavior. I really do think what's going to happen is the headlines and the new business models that come out of this. Discount brokerages have always been a thing. They'll continue to be a thing. They don't have a lot of market share, but you can make the argument now there's going to be downward pressure on buyers' commissions because it's going to be much more prevalent. It's going to be much more, there's going to be a lot more awareness that, hey, if you're listing your home, you should have a conversation whether you're going to buy, whether you're going to pay for the buyer's agents or not. And I think those conversations will be more commonplace, as they should be. I think ultimately it's a win for the consumer. But standing where we stand as NewsZip, where almost 90% of our deals are first-time home buyers, to ask them to pay for a buyer's agent upfront or in cash, or to think that they don't need a buyer's agent is highly unlikely. Because again, if you think about the consumer, largest financial transaction they make, we look at the data, we interact with buyers every day. and they need a lot of help. I mean, they need representation in this transaction. Otherwise, it becomes an unbalanced market where sellers will have a lot more leverage, and the first-time home buyer is going to be at even further disadvantage. So I think Zillow said it well on their Q3 earnings report. This ultimately could be a step back for the industry if buyers' representation disappears. But ultimately, it's what best is for the consumers to have it. How much they should charge for that, I think, is what we're going to see shake out in the next 2 to 3 years.
So you don't think that the total broker, the total real estate commission is really going to change? It's just going to be the split. We'll get adjusted in some fashion, right?
The market's always dictated a split. It's never been, I mean, the average commission isn't even 3%. I think it's 2.7 because it's negotiable. I think if anything, it's going to become more negotiable. I think anticipating to go down to zero is just highly unlikely. Again, I could be biased, right? But it's how the compensation happens might change. And it might be a world where instead of it coming from, the listing agent's pocket, ultimately gets bundled into the mortgage from the buy side. We don't know the answer to that. I could see a couple of different scenarios playing out, but I don't think that people won't need buyer's agents overnight. And then if they do, that they're not going to compensate the buyer's agents.
So do you suspect that when it gets built into the mortgage, potentially, that's an additional 2.7% on top of the seller's agent commission? So let's say the seller's agent commission is 5%, 5.25%, 5.5%. That instead of paying, instead of splitting the 5.5%, it's now the total payout's 8%.
No, not at all. I just think instead of the listing agent charging 5, the listing agent is going to charge 2, right? And then the buyer's agent will be a separate line item. I think that's the whole thing about this cooperation, is that the collusion theories about why are these two things bundled together? They should be separate line items on a transaction. And I think ultimately that's where a lot of what I think hyper regulation is going to happen the next couple of years. We'll be around that. And how do you communicate compensation? How do you promote a listing agent, a buyer's agent's value proposition? What does a buyer's agreement looks like? All those things have been very, untangible. I mean, 20 to 30% of buyer's agents even get their clients to sign buyer representation. I think the numbers is going to have to be 100%. And what's dictated in that contract, how they get paid, there's going to be a lot of different versions of it. So we don't know what will become the norm. In fact, it could be a state-by-state MLS thing, which I don't think anybody wants. I don't want to have a different way to buy a house in Texas than California. Ultimately, we know there's nuances there, but the less nuances, the better it is for the market. So we have yet to see what's going to happen. We're very curious to see how the DOJ's opinion on this, because obviously they filed a statement of interest, and they have verbally said something needs to be tweaked, but we don't think that buyers' commissions needs to go away completely.
Yeah. What do you think is going to be the impact, the longer term impact of like future litigation? Do you think it's going to impact, regional firm? I mean, the national firms are the lowest hanging fruit, right? I mean, they're going to, lawyers are going to circle the wagons around, as they have already have around Exit and around Keller Williams and Coldwell Banker and so on. But there's a lot of really large regional real estate players that have really not yet been targeted. I'd be curious to see how disruptive that's going to be on that front.
I mean, there's going to be a ton of copycat lawsuits. There already are. The size of the damages from this verdict, I think, is the biggest kind of concern here. It is not an insubstantial size. It could put a lot of these brands out of business. And this was just the state of Missouri. So we see lawsuits happening in the state of Illinois. You're going to get copycat lawsuits across all 50 states. So that is the concern here, is that these large brands don't have the capital to pay these fees. And so the appeal process, who knows, will take a couple of more years. We'll see what the damages turn out to be. But I think in Missouri, with the verdict, with treble consideration, it's like a $5 billion amount. So there's not a lot of real estate brands that have the capability to pay that money. So that is the ultimate concern, is what happens to real estate brokerages, the big franchisors, the big brands. I think that's going to be the biggest shakeup of all out of this. And it's really dependent on the appeal process and what those damages end up being. It's a shame, really, because I sat at the table at Keller Williams. I can tell you there's absolutely no collusion or conspiracy with NAR. It was more or less like, oh, the whole NAR thing was an afterthought. Gary Keller took the stand and said, hey, like, we never enforced our agents to be part of NAR. It was just kind of best industry practice, apparently, because NAR had this influence. And ultimately, I think they should be the scapegoat because they're the ones who require the MLSs to have this field. But yeah, once the brokerage brands get rolled up in it because they require their agents to be NAR members, that's going to be really sad to see because I think a lot of these brands won't be able to survive it. And I think we're going to see a much more fragmented real estate brokerage environment here. I don't know if that's good or bad, to be honest with you. I think teams have been rapidly growing from the real estate side. Teams have been dominating the space. Even at Keller Williams, they've launched a team ridge concept, which is a combination of teams and brokerages. So if anything, I think brokerage brands will become smaller, but a lot more powerful. And I don't think we're going to see 1.3 million real estate agents in the industry. We're going to see substantially less, which was already happening with the market dynamics. But now with this and the brokerage brands being up in the air, I think, you could argue that the number of agents in the field could be half.
So do you really think it's going to be that aggressive? I mean, are you seeing that, Brock? We've talked about on the mortgage side, we've lost, 600,
several 100,000 LOs in the last year.
Yeah,
or so.
Not 100,000 LOs. I think we're down to about 89, 90,000 from 160,000?
I think it's like right around 100K loss. I think it was like 180 or 90 down to 80 or 90.
Oh, There we go. Yeah.
Yeah.
So do you really think that we'll have a real estate attrition down to, I mean, to be a realtor, most realtors were not that active to begin with. They just renewed their license to have a license, just to do that occasional deal.
Yeah.
Everyone wants, everyone knows a realtor or wants to be a realtor or wants to be a part-time realtor, especially if you live in Florida. It seems like every third person's a realtor. Do you see those numbers really diminishing, or do you just see them just being less active?
I think it's going to be less of a, I think it'll be kind of similar to with loan officers. Maybe not quite as extreme. Obviously that was like super rate driven, where real estate, didn't quite shake out quite so much as refi, obviously. But yeah, I think I think buyers agents, like in general across the country, are going to make a little bit less per deal. Obviously, fewer deals are happening this year anyway. And so, I think it's just going to become a more and more real job where you're going to have to, earn market value. And I think there's going to be fewer people that find it worthwhile to do the one deal or two deals just because they have rich friends or just because they're doing transactions for their family or those kind of things that you see every day. So yeah, I don't know if it'll be that extreme, but I mean, the fun fact that we always said, and at NewsZip is really important to us, is like, we want to work with the professional real estate agents, the top 25%, maybe even the top, less than that, 15, 10%, because the bottom 50% do less than 2 transactions a year. And, I think it's like the bottom 70% do less than 3 or 4 transactions a year or something like that. It's this huge step function that we really, at NewsZip, we made a hard line that we don't work with anyone that's not in the top 25% of agents by volume in their area, because that's what we think is roughly what a professional agent who's taking it seriously as a full-time job with some degree of success is going to be at. So, I mean, from that function is like, we don't work with 75% of real estate agents because we don't think that they should represent buyers. So, yeah,
I mean, it's always been an 80-20 rule. 20% of realtors do 80% of the business in the space. So when we built our network, that is who we targeted. And then we left a little bit of room for, you don't want to weed out the other 100 agents because sometimes that production data can be lagging. So that's why we got a top 25%. But yeah, I really do think it's gonna be substantial because one of the things that no one's really talked about is like most of these large brokerage brands, they're recruiting businesses. Keller Williams, EXP, they go out there and they recruit. They convince people to become agents. They are attached to every state association real estate school. They spend dollars advertising, be a real estate agent. I think if those big brands don't have the capital to recruit and train agents as much, then I really do think the bar is gonna increase because of hyper regulation. Like doing a deal is gonna get a lot a lot more complex. There's going to be a lot more compliance around it. I think there's no doubt around that. And then if these big brands aren't recruiting all of these, I mean, the joke people had about Keller Williams, right, wrong, or different, was like, they'll take anyone with a pulse. But from a Keller Williams point of view, it was like, hey, like, we want to build entrepreneurs. Like, get your license and come here and we'll tell you how to build a big business. We'll write a book about it, right? The Millionaire Real Estate Agent. And so the idea was we can empower anyone to be a real estate agent. Just about anyone took that offer. I think that recruiting arm is going to suffer a lot. And I think the opportunity is going to condense. Therefore, that top 20% are the best situated agents that I think are going to dominate even more in the market to come. If it gets more competitive, if there's more downward pressure on commissions, I mean, you're going to have to run a very efficient small business, because that's what realtors are, to survive in the industry in the next 10 years. And so therefore, I really do think it could be substantial, the amount of agents that drop out.
But it sounds to me that it's really not going to make much difference to you, because you don't really, the agents who drop out are going to be the agents that don't do a lot of volume to begin with, and you don't really work with those agents anyways.
Yeah.
Correct. Yeah.
On the face of it, yeah, I think it's not quite so directly a threat to us as it is to sort of like the old school real estate agent matching networks, like the real ones like Cardis, or like the more standard ones that don't have a tech platform that helps them be scalable and helps them help a massive amount of people. But I mean, there's some disruption to the core business model that could happen, where we're sharing in the buy side commission on most deals. That's a lot of our monetization. So but we've talked about this before, and with Jeremy, I think, but tend to believe, as he does in the title space, I kind of do in this space, that in times where a lot of things are changing and new products and new monetization models and everything else, that if you're building the best client experience and partnering up with the right people, you're probably going to come out even stronger through it, because in times of chaos, people flee to what's working. And so we're trying to build that.
Yeah, Rick, you talked about timing, right? Oh, what a great timing for this business model. That wasn't by chance. That was very surgical from my approach, that spending my time at Keller Williams, we acquired a mortgage company, launched Keller Mortgage. I saw the lack of collaboration between those loan officers and agents under the same umbrella.
Yeah.
We decided that someone needs to build a platform, because agent matching in its current state is, hey, here's a call center. I'm going to call an agent. I'll find an agent for you. I'll get them connected. There's very little tech. I mean, the bar has been set pretty low, which is why we attack this space. And consumer behavior, they're going to lenders first. I mean, LendingTree's, said it publicly at Inman, 75% of the leads don't have real estate agents. NAR reported first-time homebuyers are contacting loan officers before real estate agents for the first time in history. So we are firm believers that the mortgage industry is going to become the conduit for the real estate experience. Now, is that LO trained to talk about home search, to talk about, which houses have pools, can you afford that, et cetera? Or do they need a division of their portfolio that is well equipped to do that, which is what UZIP does, is basically say, hey, you can have your own real estate division that's RESPA SOC 2 compliant tomorrow. Just plug us in. And so the platform approach was very mindful for us to say, we think this is where the future is going, and we think it's been underserved from a technology perspective. So let's get in there. And from a timing perspective, the whole refi purchase thing, that was probably the thing. We're like, refi is going to dry up. These rates are going to have to go up, and these lenders need to have a purchase strategy. So all of those different variables were given my experience at Keller Williams, were actually played a critical role in us deciding to launch UZIP when we did.
I wonder which point that Louis is referring to.
I'm making so many good points. It's hard to tell you.
I just spin them out.
That's great. Louis says that locally in Massachusetts, we're seeing them go after established agents mostly, which makes sense. Are you guys? No, I know, Brock, you're in Philly, right, Brock? Or you're in the Mid-Atlantic.
I'm in New York.
I'm in New York.
Yeah.
And where are you based out of?
I'm in Austin, Texas.
Oh, you're in Austin. Okay. Why are you licensed as a broker in Massachusetts, and only in Massachusetts on your site?
Yeah. So Todd, my co-founder, he had originally started a version of this company that was direct consumer agent matching. So kind of like a HomeLight 2.0 model. And so when we had met, he had built a really good agent matching engine, but ultimately his distribution model is direct to consumer. And I was at Modern Venture saying, oh, I'm thinking about building a B2B platform, like an enterprise software to allow lenders to offer this. And so that was also, again, match made in heaven kind of thing, just like me and Brock, was to say, oh, cool, like you have this brokerage stood up in Massachusetts. We're going to make it a referral brokerage nationwide, which you're able to do. So we only need to be licensed in the state of Massachusetts to operate the model the way we have. And so I brought the front end tech distribution model. Todd, my co-founder, brought the brokerage, the agent network he had spent years of building. So it kind of gave us a shortcut to go to market, if you may, because he had spent 3-4 years building the back end of his business.
And we do have a good number of New England partners between my background, New England, and Todd's, and we're signing up some more. So we're a little bit heavy towards New England still, but it's spreading to a lot of national partners now. But the other thing I'll say is, Audie kind of said it, but I was blown away. I've looked at what I believe to be every kind of agent matching model and real estate experience model between being at Rocket and EasyKnock, with both places we partnered with a bunch of them. And this head start that Todd and others had been building for the last few years before kind of rebranded to NewZip and brought Audie in is just an amazing agent matching algorithm, as well as unbelievable analytics that go through the whole purchase and real estate transaction. So I mean, it's even the top lenders don't have anything close to these sorts of analytics and agent matching and agent scoring things. And so we tend to win a lot of deals through executives that way, where a CEO wants it or those kind of things. So we got to credit Todd a lot there, who's not on the show here.
Yeah, I'll say this: we wouldn't have been able to recruit Brock, right? He had seen how Rocket Homes operated at the highest level, and then we showed him what we had, and he said, "Okay, this is really interesting." And you're right, Brock. A lot of that credit does go to Todd because he had done a lot of the grunt work.
So where do you go? Like, so 1.0 is essentially, bridging that gap between the realtor to the LO back to the realtor, to kind of nurture really, I mean, it obviously, the loan officer really, or the mortgage company really benefits the most. The value proposition really, the nucleus of it is really to the lender more than it is really the realtor, even though the realtor ensuring up the relationship with the lender in a compliant way has its advantages, but really the main value proposition is to the lender is sort of for NewZip 1.0. Where do you go from here? Like, where do you go beyond that? Like, once is it just trying to just penetrate that as far as you could go, or is there sort of expanded sort of services you can around that to add more value, charge more fees, or what have you?
Absolutely. You're right. Lenders feel this pain the most. So that's why we serve lenders, right? Is lenders have a leak in their funnel. They're interacting with clients. They need to provide this real estate value proposition because their largest competitors are doing it, right? And so 100% we are committed to the mortgage space. We're big believers in that. Where we go from here, if you think about the agent matching model, it's a bottom of the funnel solution. It's hey, you're getting pre-approved and you don't have an agent, use this service, right? Really, where we go here next is leveraging AI to make this a top of funnel value proposition. Every single lead you interact with, the 75 million online mortgage leads out there, should be offered a branded lender real estate value prop, and it should be better than what is today. What the market has done and what a lot of firms out there have done the last 10 years, and they've sold white labeled home search. Hey, Mr. and Mrs. Lender, you should have your own home search because people will use your home search and then you'll know what they're looking for, right? And you'll have to be better positioned to qualify and nurture that customer. And that strategy, from my perspective, is really short-sighted because they've already used Zillow 6 months before they even contacted a loan officer or realtor. So now you're trying to convince them, hey, don't use Zillow, the best real estate search portal out there. Use my white labeled, go use my mortgage lender realestatesearch.com instead. Very unlikely to happen. I mean, we built search at Keller Williams, KW.com. We did user research. Ultimately, people are like, why should I use this over Zillow. We got traffic, we got engagement, we get a little bit of data, but I really think, again, this is the next part of the market that we believe has been underserved. So agent matching, top of the funnel, could be done better. We proved that. We published the white paper on HousingWire. The numbers are better than any other agent matching platform's been able to do out there. We believe that's because of the tech. Now let's go top of the funnel. Let's talk about, hey, what does the real estate experience look like for every person that goes on your mortgage company's website? Is it search? I don't think so. So we're trying to build something unique there. And I will say it's definitely leveraged about using the OpenAI tools that have been created in the past 9 to 12 months. Give any startup a substantial amount of lead time to go and build a scalable AI solution that we think is going to change the game in terms of how mortgage companies have real estate conversations with their leads. So it's not going wider, it's going further up the funnel and building a more of a vertically integrated platform that complements the lender's value proposition, doesn't get in the way of it. Brock, did I answer that correctly? Would you agree with that?
Yeah, totally. And if not, you can just tell me you're the CEO, so you get to choose. But no, that's exactly it. But yeah, Rick, at the beginning of your question, you nailed it exactly. We're selling to lenders. It's a value prop for lenders. Just at the sort of the tail end of the process, these realtors get these incredibly well vetted leads. Zillow leads convert maybe at 1% for realtors, maybe lower in some markets. Ours convert at 35%. So realtors, it's a pretty straightforward partnership. We're giving them their best leads other than maybe reload. And so they want to work with us. But with lenders, it's a more complex, like we want to deeply embed into their process. And to Audie's point, right now we're embedding in their process from the point of training LOs and, creating co-branded materials, scripts, things like that. We want to take it, 5 steps earlier in the process. So the second a lead comes in on your website, on LendingTree, whatever, you're having a real estate conversation from minute 0 instead of day 3.
How long does it take to onboard a new lender in their real estate relationships? Like, what's the onboarding process look like?
Really, it can be as fast as makes sense. With a lot of the larger, like I guess mid-sized to larger lenders that we've signed up recently, we tend to, take a handful of calls to get through a simple contract that, we do the real estate side, you do the lending side. So the contract's pretty straightforward and doesn't tend to get too much red line. But if it does, that can obviously add time. Once that's all in order, we usually spend some time on integrating processes. We have a bidirectional API that's all published, so we get in the hands of their tech team. But some people we just give direct access to our platform, and so in that case, they can start sending us referrals that day. And we tend to do kind of a train the trainers call with the executives, and then get the LOs access, and then train the LOs. So it can be days, it can be hours for a small company.
Yeah, I was gonna say our average is about 2 weeks after the contract signed for implementation. Usually training and getting herding the cats. We've done it day of. Brock has literally been on a sales call. They wanted it. They got it that afternoon. And so I think the quickest one we did was a matter of hours because the way we built the platform, it's a button. We can just give you the button today. We prefer you go through the training and the onboarding and the requirements process. But we could it's a platform. We can give it to you today if you want to within a couple hours. So I think that's the fastest we've done. Would you agree, Brock?
Yeah, no, exactly. And that's really the advantage where, it's so different than other things that exist out there in terms of that scalability where we can spread costs across, today dozens of lenders, tomorrow.
Yeah.
Hundreds. Yeah.
Are you guys going to go to the Independent Mortgage Bankers Conference in January? Just to network and sort of talk about that. I know that I might be speaking at that conference. It's going to be in New Orleans, and certainly.
Yeah, I'll definitely be there. I like that conference. Audie and I both went last year. We weren't working together yet, but we got to hang out there. So I don't know. Audie's got a newborn right now, so he's a little light on travel, so he can speak for himself. But I'll definitely be there.
Got it.
TBD.
Yeah, I was going to say because if I speak there might be I might be able to work into the discussion or the presentation around market trends and what's happening around sort of the evolution of the real estate agent, sort of Realtor 3.0 to some degree.
Yeah.
1.0 was just sort of the sell side, 2.0 is sell plus buy, the buy side, and 3.0 is really sort of the next chapter in that relationship, and not having it quite, the process be quite as disjointed, But yeah, any other conferences you guys are going to other than the Independent Mortgage Bank conference?
I'll be at a conference called Venture Tech next week in Dallas. It's a fintech conference for credit unions. So credit unions are really big fans of our program because it's a member benefit, and we have the cash reward component to it. So I'll be at that Lending Tree Summit the week after that, which we love. It's a very intimate
and that
setting.
cash reward gets contributed to like the borrower's down payment or something like that, doesn't it? Or how does that work?
Yeah, it's credit at closing. So it's 50 bips on the buy side that will go as a real estate concession on the closing disclosure. So the customer on average saves $2,000 using our program. So you're talking about downward commission pressure with the whole new, DOJ, all that stuff. We already are saving customers about 50 bips on the transaction by leveraging the referral fee the agent pays us through the commission. So we think we're even more positioned if buyers want to pay less, right? Like we're well positioned to service that as a marketplace. But yeah, that component is really interesting, especially in this high interest environment of, hey, we can save you 50 bips buy side. And then if you want to sell your property, we can save 100 bips, 1% from a discounted listing fee.
And,
I love that.
I guess the question, Rick, was what do you do with that money? The answer is it's available to you, the lender. It's available to your underwriters. It's going to be there at the closing table, as Ali said, as a real estate concession. So we have everything from, prepaying mortgage insurance to buying down rates, certainly in this environment, buying down rates temporarily for the first couple of years seems to be a common one right now. But the most common one still is just bringing down cash to close because that's obviously what hampers most transactions is getting enough cash to close for especially a first-time home buyer.
I love it. No, that's fantastic. I think that's probably one of the most misunderstood pieces in the transaction itself. Like, I don't think a lot of lenders understand how valuable that could be, to both the consumer as well, just in pulling the relationship together between the LO and the realtor, and be able to provide that benefit to the consumer. And that's the three-legged stool that transaction really sits on.
Yeah, that's an ongoing sales tool for an LO too, right? If at the 11th hour, the client's thinking about going with a different lender whose rate might be marginally better, it's a great hook to say, cool, well, we can do a rate buy down as long as you use our realtor side.
Well, that's great. Well, good. Well, that's pretty much our time for today. I'm really appreciate you jumping on, Adi. And I know that we get a handful of live viewers, but we get several thousand viewers, in the residual play on LinkedIn. So I'm hoping that more people take notice of what you're doing. I love it. I think it's super innovative and smart. I don't think you could get a better representative in the market than Brock on the sales side. So I think it's a good. I think you have a lot of traction and a lot of conversation around what you're doing.
Yeah, I appreciate that, Rick. And thanks for having me on the platform. It's great to just kind of hang out with you. I know Brock does this every Friday with you guys. So excited to be on and play a role in it.
Isn't Slivovitz? Isn't that a Croatian drink?
Slivovitz, yeah.
Isn't that a Croatian drink? So that'll be. We don't smoke pot like Joe Rogan does. We don't smoke pot.
We're thinking about mixing in something. It's Friday afternoon.
Brock coming from Maine might be into hallucinogenics, but yeah, no, we might have to introduce
mostly the hazy New England IPAs, but
exactly.
That sometimes makes me hallucinate, to be honest.
Typically, this broadcast is brought to you by a brewery somewhere in New England. We've had a few. Last time it was Wicked Weed out of North Asheville, North Carolina.
Let's get out to Bissell Brothers in Maine. I know Jeremy's been there recently. So.
Hey, these sponsors are just as surprised as we are when we announce their sponsorship. So I'm waiting to get the cease and desist, but I'll be happy to frame it when I receive it. So good chatting with you, Adi, and Adi, and I look forward to following up with you and seeing you around the industry. I will be at the Independent Mortgage Banker Conference in January in New Orleans.
Cool.
In Brock, always good to see you. We'll see you guys over the course of the next week.
Yeah. All right. Appreciate you.
Look forward to next week.
All right. Take care, guys.
See you, Rick. Have a good weekend.
Take care.